Yep. So, Eileen, thank you so much for coming for this session's webinar, and we're really looking forward to have these sessions. Yeah. So I think as many of us may know about Concord, maybe some of them may not know about Concord. Yeah. Probably could you give introduction about yourself and Concord? Yeah, please do so.
Sure. Yeah. Thank you for
Yes.
having me, and thank you for this invitation. It's always great to be able to share some of the experience and our relationships with our clients in
Mm,
Indonesia, especially, and what we have noticed and observed in recent years. So, my name is Eileen, and I've been with Concord Ventures for over 3 years now. We are actually based in Seattle, Washington, and we have an office in Indonesia. We have a team of 6 people currently in Indonesia. And I've witnessed over the last 2 years that I've seen a lot of growth. We started with a 3 people team in Concord, and now I've definitely seen it quadruple to over 10 people in our company now, even though
wow.
it's still a small size, realistically. But I would say that we're a small team that wants to achieve great things and build long term relationships with the clients and our investors in the network.
Mm,
And so, kind of like at the core, I work really closely with the senior executives and also our team in Southeast Asia to really drive pipeline growth and identify opportunities for investors in our network. But yeah, in Indonesia, generally speaking, we have seen the birth and rise of a lot of unicorns, and they're known to be backed by entrepreneurs and investors. And we're really excited to see what's the next startup, what's the next entrepreneur that's gonna be able to build a big company and be able to scale it and actually raise rounds from great investors. So that's in a nutshell. We have also established a lot of relationships with not just VCs, but strategic players like Ant Financial. We have spoken to Gret Ventures. That's also mainly because we are very focused in fintech. So we had to leverage our network and approach them, but it wouldn't be possible without our team in Indonesia and, of course, the relationships we've built in Indonesia.
wow, that's very interesting. Grab ventures, guys.
Yeah, it's not it's good to have to be able to reach out to some of the investors, but of course they sometimes will rely on us to find startups that are something that they're looking for. So we spend a lot of time analyzing that.
Wow, that's great. That's great. So now when you talk about startup, right? Could you share with us, right, what is actually normally the venture capital or even Concord itself, right, looking for the some elements, or is it like you're looking for a dream or looking for a business plan, or you're looking for what are the things that you're looking from startup actually?
Yeah, so from our standpoint, we are pretty industry agnostic. But speaking to like VCs or investors, it's kind of hard to say, but usually it's very clear on their website in terms of what they invest in. Usually they just say early stage, only seed, late stage sort of thing. So it's pretty clear when we communicate with them, we kind of understand their theses and what they look for. But for us, as I mentioned, we are very agnostic. So we are open to looking at any type of startup, and we'll try to land on those whom investors in our network are largely signaling. And then, of course, through our research and our understanding of the market, we try to really complement what investors are looking for and what we can
Mm,
offer, and then find startups that can really fit those criteria. What we do want to know is that, at least you have an MVP, there's a problem you're trying to solve, and really what the mix is of your team. But overall, we do pride ourselves in really reaching a common goal with our clients or any startups in terms of like raising the current rounds or even succeeding rounds. So we're looking kind of past that horizon, but we don't really limit ourselves as to what startup we will or will not accept. We want to be really open minded, but at the same time, we want to be really knowledgeable and really narrow down what our opportunities are and actually be able to share them with the investors.
Hmm. Oh, that's a great point, actually. Yeah. So, if I get at your point correctly, like, so you're actually looking in a way like holistic. So apart from their story, their background, and the team probably, and I believe that you're also looking like, on overall or how the startup itself, right, can help or even solve some challenge in the world or maybe in their respective area, actually, isn't it?
Yeah, exactly. As
Yeah.
long as you have an idea, it just shows that you're trying to create something, you're trying to create an impact, you're trying to solve a problem, you're trying to provide and add value to someone or a market, for example, and maybe even create a market out of nothing. So
Hmm.
we look for anything like that, but ultimately it really is the person behind it. So like the founder, the entrepreneur, um, how he or she is able to identify and put together a team, build a product, and actually have a vision of taking it far.
Hmm. Oh, that's interesting. Okay, so let's say, right, if there's a founder or startup, right, they actually come approach Concord, right?
Mhm.
So now, are you able to probably give us a hint or probably give us, what kind of process that normally from the first interactions until probably the goal probably, hey, get an investment or maybe a side with a strategic partner?
Mhm.
Yeah.
Yeah, it's definitely a long process, I must say. So I'll try to keep this really short and just concise. But of course, I think when the later on questions, I'll be able to expand more on those thoughts.
Mm.
So typically, we get to know a founder or an entrepreneur. We maybe have a couple calls with them, maybe just one or two, just to really understand what product, what services they're bringing, what's really driving the
Mm.
purpose behind, and also like the story behind it is important for us too, so that at least we can just understand very well what the business is about and who the founder is. So after those conversations, for us, we generally go into like a marketing agreement, and that only covers like us sourcing investments and raising money. Anything outside of the scope will require some other conversation if it's like consulting services or anything else.
Mm.
But our expertise really lies in raising money and sourcing the right investors. So once we're past that marketing agreement, obviously we'll spend some time looking over and make sure it's all good and
Mm.
mutual between everyone. Then we'll have that marketing agreement in place. And I think after that is really when things get really busy because we're going to have to spend weeks and months trying to put together a deck and a teaser that will blast out and share to investors. So it's important that we communicate very proactively, or it's something that we want to do during that process so that we are getting enough information to put together those materials. And then when that's done, we'll blast it out to our network of thousands of investors. We'll also do individual targeting. So, like, we'll use proprietary platforms for research. We'll use like things like PitchBook. In the US, we have
Mm.
Crunchbase. In Asia, we kind of read a lot on like we look at Tech in Asia, we look at Doshi Asia. So those are kind of like our ears and eyes too. On top of our team that's actually actively doing a lot of research there. And then once we are in the process of identifying investors and speaking with them, there will be some kind of introductory calls during that time that we'll try to initiate between the investor and the founder, because the investors is definitely they definitely want to meet the founder and really understand the business a little bit more. And then during those time, there will be a lot of mentions and conversations around valuation, projections, and a lot of numbers crunching. So I can touch into more on like I think we're going to talk about maybe the financial documents and stuff, which I can go into that later. But generally, yes, we'll talk a lot about that. And then there might be some negotiation that comes in, something that we want to support a lot, because we know that not everyone has the skill or experience negotiating, and you don't even know, you may not know what your valuation is in that market. And for us is that we're going to take in, like, we'll take in consideration the competition in the market. We're going to look into kind of like the viability of your product. We're going to look into like what the future would look like in that market, and then set like a reasonable valuation that you will agree upon and the investor will agree upon. And then our hope, obviously, after that is that investor will come back with either a term sheet or an LOI for you to look at. And then typically what happens after is that you just have to, it's all like putting pen to the paper. And then after all the agreement is done, and then yeah, and then you get your round. But I must say it also doesn't stop right there, because
Mm.
after raising money, your pace and your momentum is going to speed up. It's never going to stop right there, and you have to think about raising more rounds and increasing your valuation. So it is a very long process, but it is something that is attainable, as long as you have kind of like the dedication and the drive to really take this forward. It's something that investors are also looking for, which is a reason why it's can be very hectic, because investors need to do their math. You also need to do a good job in like crunching all the data, and really justifying your valuation in order to finalize that round.
Wow, that is to me is going to be a wonderful journey, isn't it? And I
Yeah.
like you know what I like, right? I like when you mentioned about how you actually help the startup, right, to create a deck for them, or even like help them in a certain way so that they
Hmm.
are able to produce can I say a quality document for investment purpose.
Hmm.
Yeah, I think that's what I like. That's what I like about that. Yeah, and
Yeah. Hmm.
but one thing that I'm looking forward, I mean, interests me, right? You mentioned one thing that the founders have to know about the numbers, right? So could you elaborate more? What kind of like numbers, or what kind of like financial documents that normally it is maybe in investment purpose, right? What are those
Yeah.
documents? Yeah.
Yes, typically it will be your financial statements, like your balance sheet, your profit and loss, and then some sort of uh, historical user data. But of course, we do recognize that if you're pre-revenue or you're pre-profit, you may just only have an idea so far and not have so much financial information. So that really is not something that we can make up from and pull out from thin air.
Mm,
But what you can try to do is that at least have some form of way, or at least start be in a habit of tracking any type of user, whether it's from your beta testing, whether it's from maybe your survey, maybe it's from kind of just like things like that. So that's something that we'll want to look at if you don't have much financial data, which is also understandable to investors, because then there will be other components that they will look at, like back to the like team part, what your experience is, what your skills are. But in terms of documentation, yeah, basic financial statements, otherwise user activity, anything that can really tell us about traction is something that we'll request, and eventually investors will request too. So we don't want it to come as a surprise later. We want to be able to deal with that with founders first before the investors as you come in and say we yeah, like just demand for a lot of things after that.
mm, yep. Uh, so another interesting question that pop up in my mind, right? So because let's say um, when the company or startup, right, they are so eager, right, to find investor or investment, right? So now somehow, right, they may or may not, right, do something like we call it a bloating the number, or even like jack up sales, or maybe jack up the revenue and so on.
Hmm.
So
Hmm.
probably can you share like if the person doing that, right, how that experienced finance analysis, right, able to detect that?
Uh,
It-
yeah.
Hard question.
Yes, something that I have to think
Uh,
about. And I also want to try and bring in some examples too, just so
mhm.
it's, easy for everyone to understand and think about it. Someone is saying so hard questions. I know, like the target's on me. But anyway, it is very realistic question, and it's something that we also tackle. It is fine if if we see discrepancies, it could be like an oversight thing. But for us is that we try to look at what the market is asking for. If you have like a product like a fintech product, for example, and you're offering maybe like investments services to users, and we know that in Indonesia there are about 300 million people. There are more than 50% that don't have mobile penetration. So we'll take those percentage and population number into account, and also what your real target TAM is, which is your total addressable market will be, and make sure
Mm,
that it's actually realistic in your financials per se. So yeah, so we do take a lot of other factors into consideration, something that you may not necessarily see in the beginning, and we don't say like, hey, why don't you know about this, that kind of thing. Our part is our responsibility is to really share and provide guidance into your financials and into really seeing your financials so that investors can really understand. So yeah, things like that. We do, it does come from knowledge and a lot of research in terms of flagging any numbers that we see could be bloated up or anything like that. But yeah, we do analyze those numbers, and then we'll talk to the client and see and say that, hey, can we bring this number down a little bit, or hey, maybe it's more realistic to target X amount of users in like 6 months versus
mm.
1 year, that kind of thing. We may try to even be a bit more optimistic or bullish, but sometimes we also be a little bit conservative too, if let's say you're being a bit too bullish. But yeah, we want to be very transparent on that.
Wow. I think striking the balance right between conservative as well as the bullish right is a
Yeah,
tough.
we've seen two scenarios. Yeah, we've seen different scenarios. Some founders are very conservative. They're
Mm,
just like, I don't know how much we can do, but at the same time, we're like, you can definitely do twice as much or 3 times as much. That kind of thing. And we've also seen like clients really are just too optimistic about and not really thinking about what competitors are out there, what market share they have. And then
mm,
that's when we also come in and say, maybe you just need to be a little bit more realistic, but we can maybe think about what other product or features you're trying to offer and how we can defend that kind of projection they're thinking of. Yeah, yeah.
interesting. Yep. So here's the thing. So during the fundraising, right? Based on your personal experience, right? Do you found some the common mistake or something that normally or perhaps unintentional mistake that happen for a startup founder when they're actually doing the financial documents or even deck or pitching and so on. Yeah.
Mm.
So what are your experience with this?
With financials, maybe it's just consistency. A lot of times, or maybe
Mm,
there are a couple of times where when we ask for quarterly financials, every quarter is like so like this quarter I asked for last quarters, and next quarter I asked for this quarter again, and then the numbers just kept changing. So it's hard for
mm,
us to um even explain the changes so much when there shouldn't be too much changes, and we don't want investors to also be just like confused with where how are all this why are the numbers affecting when it's kind of previous numbers, right, to begin with.
yep.
So we want to make sure that we install the mindset of being consistent with your numbers, and but also really understanding your numbers. So especially in those investor calls, a lot of times the last part of the call consists of questions related to financials and data. So I would say I would want to have, like the founders be really on top of their numbers. Something that I think will be helpful too, because then the investors know that you have great clarity on your business. And so then they can also trust you with their money, right? It's kind of like a numbers thing too. If you know your numbers and you know how much growth you're trying to capture and how you're going to use those funds, then I think that's also a good, that there's also additional points for you. And then in terms of maybe deck and just pitch in general, you can always pitch without needing to really uh, maybe to really need like a long deck to begin with. A lot of times founders want to hear your story from yourself, versus let like a long 50-page deck do the
Oh,
talking.
50.
Yeah, sometimes these calls can go on for very long, but yeah, they do want to hear you be able to tell a very compelling story. But it's good for a deck to really, if it's gonna guide you in your pitch and
Mm,
just in terms of your train of thoughts, because you do want to highlight some important points too.
yep.
But what I'm saying is that you also have to be like, don't seem like you're too rely on the deck. Really know what you're talking about, and then yeah, just show, just be present. And I think that's important too, because when we have those introductory calls with investors, it does take us a lot of time to actually get interest, because investors are looking at hundreds of opportunities in one day, in a week. So when the opportunity comes, I think it's important to just like really jump on it and be prepared for it.
Wow. Thanks. Oh, that's very good tips. That is really, really good. Yeah. So, in fact, when you as you share, I also learned one or two from there.
That's good.
Yeah, that's
Yeah,
very
I'm glad
interesting
to know
point.
it's beneficial. I do want to add one thing, as if you're talking about tip, is that a
Mm-hmm.
lot of times when we get to a point where we're able to have a couple calls with investors, I do think that founders or entrepreneurs who can actually take feedback, and be very constructive about it. I a lot of, if I see them kind of go back into their drawing board, discuss it with their management, or even iterate their product,
Mm,
even though you don't see like a fundraising round anywhere near in sight, but these feedback that you're getting from investors can be very valuable, because then you can take a couple months to really maybe bump up your user acquisition, or even focus on your KYC, which is like know your users, something that comes up a lot.
mm.
And then you are in a way kind of learning and adapting and then applying those knowledge, to see actual organic growth in your business, and then be able to speak about it once we are able to bring in more opportunities later. So I think this is very important, because I think for me, it's like I don't want to see founders be kind of discouraged, even though investors are saying no, it may not be the right time. It might just be not the focus segment for them. But take
Mm,
this as a learning opportunity, take those feedback, go back to your team, talk about it, think about how to actually work on scaling and growing your business, and then, starting all over again, going back to the same investors. Sometimes they do come back and say, hey, we like to see, I mean, we do see the traction, let's talk again, kind of thing. We've seen that before.
oh, oh wow. That's very
Yeah.
good things. Yep.
Yeah, we don't really stop right there. But
Mm,
but yeah, something that I want to bring up for sure, because it is a long process again, but it's definitely one that you can also take away from, and then create different opportunities from that.
mm. Yep. That's cool. So, okay, a little bit more deep dive questions, right? So, okay, when it comes to valuations, right? Could you share like how your how what are the normally technique I would say to number the valuations, because from my experience as a startup founder, right, I want to my startup valuation this high, but somehow some people say this high.
Mm,
Yeah, probably
right.
you can share a bit.
Yeah. The very common technique is the DCF. We have a financial person in our team in Indonesia who actually works on that.
Ooh.
But we also know that obviously there are other accounting services or companies, so to speak, in Indonesia, like PwC and KPMG, for example. I know some companies actually use them, but I
Mm,
don't know if um, there are certain just kind of um, to a certain degree that is very accurate because if you're using the DCF formula, you can't really go wrong. Um, but again, those companies they only have like a one framework to follow. You
mm,
know, they don't know the business very well to be able to consider other things in terms of bringing up or making a better valuation, for example. For us, we will take into consideration like competitors and also like other similar companies in the industry or sector who have raised money at a certain valuation. So we do take those into consideration on top of like following a framework such as DCF, for example. It's called a discounted cash flow for those who don't know yet. But but yeah, I'm just saying that on top of that, we also want to factor in some other things for you to consider. So since you've mentioned you've created some kind of valuation that's very different or off from what somebody else would value for you, it really
mm,
depends on what factors you take into consideration. But I think it's important to look at other competitors who have raised or other competitors alike who have raised money and what sort of valuation investors are putting on. But that also comes from, so for us, we use a proprietary platform that's recently we gotten. This company is called Venture Cap Insight. We recently purchased their service, and we know that they're based in Singapore. And a lot of their numbers are just really down to the dollar, down to the cent, because they have partnerships with government. So like all the data they're
mm,
getting are exactly what is written on the agreement between the investors or doing at the time the money is given. So yeah, with being able to get all these numbers already, based on what's already in the market, I yeah, I think it's something that I share because it's something that's very like it gives us more insight into what valuation we can come up with for a particular client. Somebody wants
mm.
me to repeat, like, oh,
Uh,
venture cap
oh, venture
insight.
cap insight.
Yeah, I can try to see if I can, I'll just link it down here. But this is something that mostly I think investor and maybe IBs use because it does come with a subscription cost. But for us, it services the client. So I just want to put it out there that we use something like this to help us be very accurate and uh, to factor in for any kind of valuation to we're looking at.
Hmm. Yep. So I hope Mr. Akmal able to get some insight from there. Thanks for sharing.
Yeah, of course.
Yeah, thanks for sharing. Okay, so all right, so okay, I think I'm cover pretty much about like those technical stuff. So let's go a little bit broad. So
Mm-hmm.
now as VC, right, or where you're actually sitting in between startup and VC, or even maybe you are the VC itself, right? So what are the things that you actually attract investor? Are they, is it like their passion, or is it like you facial? I don't know if that factor. Or yeah, what are the factor that very appealing to the VC? Yeah.
Mm, right. So if you don't have like a business yet, maybe you only have an MVP,
Mm-hmm.
I would say the investors would really look for look into the founder and entrepreneur, kind of understand their background a little bit, know what kind of skills they can bring to the table. It could be from their experience. It could be from maybe a project, or it could be from a family business, for example. I've seen those before too.
Mm,
So those are critical things that they will look for in an entrepreneur founder.
mm,
But of course, passion really is also something that will take you anywhere, even though you don't have the experience or skills. If you have the passion to really learn, and actually find like-minded people to maybe create a very solid team,
mm,
that's possible too. It may not necessarily be a one-man show. I think it's always good to have a team to work with to kind of split up the skills and the responsibilities and to be able to give it more as like an edge, because then you'll have all these diverse skills coming together.
mm,
And in terms of like outside of the people alone, investors will also look at kind of like what solution you're proposing, if it's a venture backable market, so to speak.
mm.
Yeah, if it's a market that they will generally be interested in, and then obviously the traction if there is. But if you already have a prototype, like I said, like MVP, that's fine. It just depends on how you present it and what you really believe in and why you do what you do.
Oh, interesting. So a little bit more question, right, for the founder,
Mm,
right? So
mm,
now I think when I attend some of the startup event, right, some share to me they have two founder, three founder, or I think the
mm.
maximum up, the highest founder I've seen is actually nine founders.
Oh wow, that
Nine
can be very
founders.
complex. That's fine, but that can be a little complicated later because when
Exactly.
you start getting investments, you have to think about diluting shares. So then
Yep.
who's going to dilute their shares, or, who is not willing to give up their shares kind of thing. You might run into that situation.
Yep. So according to you, right? So what is the typical is a good founder numbers? I mean, in a team of founder or co-founder. Do you have some
I
numbers
don't
or
know
do you
if
have
there is
some
well,
preference?
I think it's really up to the founder who started it
Mm-hmm.
and who are eventually going to be the co-founder. I think you first have to be very selective with who your co-founders are. And even though you have like four or five uh, founders, but if they are really good, supportive co-founders and really share the same value and mission with you, I think that's
Mm-hmm.
perfectly fine because at least you know that later down the road, if anything happens, you're not gonna just like break up like this, which
Mm,
tend to happen, and
yes,
that could be a
correct.
problem in terms of in your capital structure.
Mm,
And then you might um, and then you might realize that you give up too much shares, for example, to someone who may not believe in the same thing as you do. So
mm,
for me, in my opinion, maybe less is more. You could just be good with one co-founder, someone who can maybe do more technical stuff, whereas you will do more of the strategic and like the marketing front facing kind of stuff, where somebody else will be the technical founder. I've seen a lot, yeah, like one founder will be steering kind of like biz dev efforts and growing the business, and then the other will be like a technical founder. So that those are pretty common. But if you don't need to have too many founders, then you shouldn't be giving out your shares like this because who knows what's going to happen? Because once you start getting investments, people are going to see the money, and then they might leave for no reason. They might just yeah, not be so involved and whatnot.
mm,
So I must say, just be really selective and really know what that person is going to be able to bring in the long term.
mm. Perfect. So, all right. So I think so far is pretty much interesting and yeah, quite difficult question to answer, isn't it?
But I hope my answers have been very clear and helpful to everyone. But yeah,
Yeah.
yes.
So I guess when we have Q&A sessions, yeah, guys feel free to ask a lot because these are the chance for you to speak with one of the reputable venture capital in Jakarta or even in Indonesia and US. Right. So okay, I got few more things that to me is quite interesting. So now let's say okay, we know that now financial document is very important, right? So do you also factor the non-financial documents from the founder to prepare? If you do, then probably you can share what kind of document that is a must to prepare and is a good to have. Yeah,
Yeah, I would say just maybe have a deck ready, even though you don't have a lot
uh,
of financials.
that.
Yeah, I think that's at least first and foremost something that we need help getting information from, because it's hard for us to. I think it's best also coming from the founder or the owner, or I mean the entrepreneur themselves.
Mm,
And then we'll take it from there and then make something better out of it. Other than that, if you, depending on what sector you are in, if you're like in fintech, for example, I know that there are regulatory things to follow, and you may have like patents or like licenses. So that there's just some other documentation in case we need it. And then other things, other information which also can be shown on the deck would be just like historical. We don't usually ask for like if you have previous fundings. I mean, we
mm,
don't usually ask for documentation, but I would say if you have it, might as well share it so at least we can keep it in our records. But it's not necessary because we know that usually founders will put it on the deck anyways. But those are the information that investors look for too, because they want to know who invested or who
mm.
invested in you in the company before, and if they know, or if there's some kind of conflict. So like things like that, just to weed out some of the unforeseen circumstances. But yeah, the best you can do is have a deck, which I hope everyone does if you have some kind of business in place, because then you always got to be ready to talk to people about your business and
Yeah, the
and start
deck.
raising money if you have to. But yeah, so deck, I mean, there are certain formats in the deck that I think a lot of people are talking about. So yeah, I mean, it's on the internet. There some VCs even talk about what they want to see on the
Mm.
deck. So just make sure you have those on the deck, so that there won't be so that it wouldn't look too incomplete.
Yep, yep. I want to touch about the exit plan. Is it
Right.
necessary for the the startup founder, right, to include the exit plan? Because for some point, right, when you make investment, for sure you want to exit gloriously, isn't it? So
Yeah. So.
what do you think about the exit plan?
Yeah, some kind of future plan. If you want to be specific into exit plan, for sure. I mean, sometimes exit plan could be going IPO, right? But what is your plan for that? Of course, you have to talk about it. You can't
Mm.
just be like, I want an IPO kind of thing.
Yeah.
So good to, yeah, that's a good point, because you want to be able to talk about how you're gonna get there. And if you don't know whether you can, I guess, or whether you're gonna reach that point, at least have certain kind of like milestones plan. Kind of
Mm,
like looking out into 3 to 5 years, where do you see that this goes, and how do you plan to accomplish those milestones or achievements. So yeah, that form of exit plan is something that investors also want to look at. And that will include kind of like how you're going to use the funding. So like if you're raising 3 million, for example, how are you going to use that money next year or next 2 years, so on and so forth. So yeah, those are the information you should include in your exit plan.
yep. So thank you. So okay, so now I'm saving my best question for last.
Is it the
Okay,
best?
I hope so.
I don't know, the hardest question of the day.
I believe so. But I hope it's easy. But yeah, let's see how you answer. So now, in your personal,
Actually,
uh,
sorry, I just wanted to, because someone asked about something and I didn't, I think I want to quickly address it here.
oh, this one,
It might
yeah,
be in the previous topic. So
exit
when you
plan,
have
yes.
exit plan, you are not obsessed enough.
Wow, Elon Musk.
How do you wait? So is he saying that if you have an exit plan, that means that you're not obsessed enough? You
I
have or you don't
think,
have one?
I see. I think this one is Elon Musk refer to himself as a founder.
Mm-hmm.
But of course, as an investor, right, you need to know what is the exit plan for them, not for you as a founder. I mean, if you exit from your own startup, right, uh, it's weird.
Right. Okay, makes sense. Makes sense. I got it. No, I like that question. It's a good question, and I do have something to say about that. And that really goes into like if usually investors um they don't invest majority anyways. You know, a lot of
Hmm,
times they're only looking at minority, and so you can't say that, oh, in 3 years I want to leave the company. Of course you can, but you do need to have some kind of strategic plan as far as where you think this is going and how you're going to spearhead this. And then the investors are definitely going to be kind of like going to be pushing you a lot because to
hmm,
them it's money that they have to return to their investors too. So you have to keep in mind. But of course, exit plan doesn't mean that you plan to leave the company. Uh, you you can it could be in a form of being acquired by another strategic player, for example, something that you can see in the future. Um, but but yeah, I mean, it's a good example from Elon Musk as to like, I don't think he plans to leave his company. You know,
yeah.
he before he I think he co-founded PayPal, which is a fintech company, and then when he exited, he took the money and now has, Tesla. So
Correct.
I don't think he said that to his investors. But I would say that's also part of the strategic move, right? I think eventually PayPal went public and he's able to take that money and actually start Tesla. So yeah.
Oh, he start a lot of things after Tesla, after
Oh,
PayPal.
actually, yeah, we can leave this to Q&A and then finish that last question that you have because I think people are so
Yeah.
interested. Yeah,
Wow.
I want to
So
cover that last question that you have too.
yes. So I guess okay. The background of this question, right? We run a mini survey with those who are in a startup community, in a small community, and they consist of someone who want to start a company and they want to start a business. And here's a question that they always pose actually and become a norm question. So now, in your opinion, now which one is make more sense? You build a business first, then you get the money, and then you fundraising, or you fundraise first, then you create a business. Because, well, you do business without money, you can't run. But if you have money, of course, you can have a lot of business. But once the money off, your business off also.
Right, yeah. So, yeah, I definitely have some reasoning as to why you can or how you can raise money first or how you can just focus on growing business first.
Hmm.
And on raising money, you can I'm hearing something. I just want to make sure everyone can hear me,
Yeah,
right?
I can hear you clearly.
Okay. So you can basically raise money if your idea is already validated and if you already have an MVP and you believe that your team has the right mix of skills and experience. So that is typically like a seed round or angel or pre-seed kind of round. So you can actually raise money as early as if your idea is validated. And I think then it will come down to the technology or maybe even the product. And then of course the founder themselves, because then if the investor want to take the risk, they are taking the risk on the founder. And sometimes you just have to really establish your credibility. Maybe you may already know some other investors. You may have accomplished certain things, and you
Hmm.
may have a different business that you have really raised money from for. Then yeah, then of course you can raise money since you have the experience and you have the team and your idea is validated in some way. So that's one scenario for raising money, right? For how or why you should raise money. And on the topic of why you should grow your business instead of raising money is if you still want to retain full control of your company. But as I mentioned, VCs is still mainly minority. if you want to raise money, then you should know that your momentum is going to grow. You're going to scale up really fast. So you have to be prepared for that. And if you want to keep growing your business a lot, sometimes it could be your partners don't want to dilute their shares. So you might just have to start selling their shares first, or at least be really upfront with the investors so that they know that that it might be primary shares or secondary shares that they're looking at.
Mm.
And of course, if you want to still continue to grow your business, your objective will be that you want to continue to scale organically so that your upcoming round is big enough, or at least you know what you're hoping for. Um, and actually, another reason I wanted to go back into like the raising money is if depending on what you're building, if you're building like a B2B product, it is you require a certain amount of resources and infrastructure, especially with like technology infrastructure. It is very costly on not just the computing power, but also on being able to build a product so that you can scale.
Yep.
So I think that's also when you should fundraise, because then
Mm.
that's sort of like a bottleneck and a constraint for you, some kind of friction that you need to address in order to continue to grow. So that's also I think the fourth reason for you to fundraise. Um, but right now, I think it's with all the new tools and everything, and that's being introduced. I think it's relatively easy for anyone to build a product and try to really just test out the market. But yeah, just have to keep in mind that once you start raising money, things are going to be very different. You have investors to be accountable for, and things like that. So there's a very different set of expectations there.
Wow, you answer beautifully. Very tricky question.
Thank
I
you.
believe.
Thank you. You raise really good questions too. I think great questions come with great answers. So
Yeah, yeah. Thanks, Eileen. Okay, now I would like to open the floor, and okay, I have one question here from Fauzi Ismail. So about SPAC merge as an exit plan for Southeast Asia startup. We may have a great unicorn and center and region, but we have no experience to jump in like another company that's successful going public through SPAC.
mhm. So
So I think the
just
question
to
is related
yeah.
with the SPAC merge as an exit plan. Yeah.
It so we actually working on some sort of a spec consolidation for some of our fintech companies.
Mm,
So it is possible. I think it just depends on maybe what other players you identify in the market, and then we can kind of help with the consolidation and make it into like a spec type of thing, which I believe is what a lot of people are doing now. But it's also something that we're working on. So it is possible. So I just want to know, yeah, it depends on what, sectors you're in. And from what I know and from what I understand, if you want to do it through the spec process, um, you do need to have also like very qualified people who may have before built a business, because eventually once you go public through spec, um, you are opening yourself to the public to invest and buy shares of your company. So the investors will want to know that you're able to actually bring returns to the public market, which is a completely very different landscape to think about. But as long as you think, if you don't have experience, but let's say you have the domain expertise, or you have the people who have already built this business for a long time, even though you don't have any
mm.
experience taking it public, for example, through spec, it is still possible. It's just something that have to be looked in very closely. Yeah.
Thank
And I know that
you.
it's also easier than taking into public, because that's the whole purpose of having like a spec vehicle, because um, traditionally or even right now going IPO is very costly and takes a lot of time.
Mm,
But I think anyone who has a running company um, should be able to position themselves if they can or already have the ability to. It is a good opportunity because then you don't really have to spend so much time and it's not as tedious as actually going IPO.
Thanks. Yeah. I guess it's quite popular in US, I think, since the high profile Sir Richard Branson is doing the spec for
Yeah, and
the
Peter
for
Thiel.
Virgin Galactics.
Yeah, it is very common here. I've been hearing about that topic a lot and something that we're very curious about too, which is why we're also trying to do the same with some of our fintech clients.
Mm.
Yeah.
Okay, so anyone have any questions? You can on your voice, you can ask directly to Eileen.
Or raise their hands. Yep.
Oh, Mr. Henry, yes. Go
Yes,
ahead.
thank you. Hi, Eileen. I have a question. When I start a startup, of course, I have a vision. The startup need to cover, let's say, 100 feature, all those kind of things. But I have to
Right.
start over from the MVP, right? My question
Mm-hmm.
is, how do we set the threshold or the bar for the MVP? Because for me, it's like a vicious cycle. If the MVP is too low, I cannot get traction. If the
Hmm.
MVP is too high, the threshold is being too high, I need to spend a lot of money. So how do we strike the balance to set the threshold? This is our MVP. Thank you.
Got it. May I
Hmm.
know a
Good
little bit
question.
more about what product you might be talking about, just or maybe sector in general?
Actually, I'm building a startup, technology startup with my friend. He's a lawyer, so it's more on a law and legal subject.
Okay, perfect.
Hmm.
Sounds good. I would say building the MVP, knowing whether it's enough or if it is at least above the threshold, as you have said, really will come from talking to your potential users. Maybe have some form of understanding of who these users are. Let them test out your product, talk to them about it, and then really try to identify what sort of trends you're getting and then make a trend line out of it. If you make three data points and you from three people and they all follow the same trend line, then I think you can sort of say with some assurance that your product could be viable for the market before actually introducing it to more people, if that makes sense. Have you started talking to anyone about the product or at least like your idea, potential users?
Yeah, we already pitched to two VC, okay, but since the person in charge of the VC side doesn't have a deep understanding about what we are trying to sell, so it's a bit hard to explain the threshold of the MVP itself.
Mm-hmm. Right. Yeah. So if you already spoken to some potential.
I hope everyone, yeah, is almost there.
Okay. Hi, do we still have time for a
Oh,
question?
yes, 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 yes. We have time. Sorry.
I just joined again as the last one was disconnected, is it?
Exactly.
Okay.
It
Hi,
seems
Miss
like disconnected and kick everyone out. Oh my gosh.
So hi, Miss Eileen.
Hello.
The beautiful talk that you had. So my question would be, what kind of startup that you're looking to invest, and then also what kind of metric you used for? Thank you.
Right. So we only kind of invest in sort of equity is what we've been pivoting into so far. But I can say on kind of like on knowing the other investors and when they invest in when they actually invest money in. Um, and if you're trying to build a startup, it kind of varies between each VC. Some of them maybe look into the NPR of your product, which is like the Net Promoter Score. Sometimes they have their own like calculation into like kind of like their magic number. I don't know the exact for that. I think it really depends on the VC themselves because they each VC have their own different metric. For us, we just kind of do like projections and kind of forecasts and then like just valuation on the company, so to speak. But I also know that other VCs or investors have kind of like their own metric. But there are some very common ones that they still adopt. But some of them just come up with their own framework or format. I don't know a whole lot of them, but I think some of the common ones that you hear of are definitely something that investors look for. I can try to maybe after this webinar, because it might be a long list of things that they look for, but I think maybe Ricky and I can work on having some kind of document on certain like common list of metric that investors look at. But it still does vary by each VC because they might have their own one.
Yep.
Okay.
We will send one note, one page note, and obviously, if Ilene want to add more, we will send together.
Yeah, sure, no problem.
Okay, so I hope most of the people are back. Any more question to the floor? Or uh,
Or yeah, maybe they can text it over here.
Yep. You can also type here. You can type the question here. Uh, Never mind. Probably I can start with the, as the ice breaking, right? So, will you share? I'm not sure whether it's convenient for you to share, but what is the toughest investment round that have you been deal, and why it is the toughest? Is it like probably like very unique industry or very unique product, or what make it tough?
Yeah, sure. I can speak on that. Yeah, personally, when we raise a round for a founder or a business, in return we get either equity or kind of like a percentage commission of the round. But if a investor, I think just like in that scenario per se, what's been the toughest is just being, I think we try to be very creative when it comes to not just one opportunity. Sometimes we put together a number of opportunities into one ecosystem. So something that we've been kind of working on in the past year was like a fintech ecosystem type of consolidation. And that has been by far the toughest one for us, because one, we have to get different teams together and just kind of see the opportunity of the entire ecosystem and how some of these teams and management should come together and either kind of like share their licenses or either just share some of the technology that they already have. So that is a little bit challenging for us because we're trying to kind of like, marry different teams together so that they can share the resources. And then also what really comes after is that you have to think about kind of like the integration part. So like how teams are going to integrate together, how technology is going to integrate together. But yeah, that for one example, the consolidation part, which is something that we kind of fancy because we have at one point about 7 to 8 fintech companies at one go, and collectively it's like a number of licenses. And then to even introduce that idea was a little bit difficult at first. But I think after that, we were able to help people kind of see the bigger picture. But right now, we're still working on a consolidation. We're hoping to get some strategic companies or strategic players to invest in the company. For me, I enjoy kind of like looking at strategic players because I feel like I can really find very similar commonalities and from a strategic standpoint and from a synergistic standpoint. But I think there are tons of investors and VCs that are out there who are willing to bring in capital and invest. So I think, yeah, that is one example. But I think the challenging part obviously is overall is to, just finding the right investor, one that the investor really believes in, and one that the owner really or the entrepreneur really believes in.
Wow, that is very interesting. Okay, since this is a recording sessions, right? Would you mind to add most points that just now we accidentally cut the webinar?
Right. Yeah. When I
Uh,
was responding to Henry, right?
yep,
Was it that one question?
it's about MVP.
That's right. Yeah, I
Yes.
think with MVP, um, I think you just need to be able to really measure and really learn what the market is about and how it's responding to your product in order to know that it's viable. And to do that, you just have to have a product ready. You need to be able to talk to your customers or potential customers, get feedback from them, um, and maybe set like a positive score, for example. Like if you think that maybe like a ratio, like a percentage of maybe like 10 users, for example, and maybe 8 customers come back and say that they're willing to pay for this product, I think that is a good MVP to start with, if that makes
Hmm.
sense. Yeah, I think even though customers really like the idea of getting free products, but you still want to eventually become a product that people were willing to pay for, because then you know that this is something that there is a demand and something that you can really create on the demand side of things, which is always a tough thing to do. But as long as you get feedback, you get some idea that customers are willing to pay for that product, and maybe based on the total amount of customers you interview, you're getting some good feedback on potential paying customers. I think that's as good as it is for MVP.
Thank you. I got one question here. So, is there any specific industry that Concord Venture is seeking to invest, and what's the ticket size?
Got it. Well, we like to kind of just like work with startups in kind of any industry, but one that we have been largely focused on is obviously fintech, which I've mentioned a lot. And but I think we already have a lot of maybe some of the companies that are really have a lot of potential. So we can still look and see how that can be integrated into like our fintech ecosystem as a whole. And then other industries we look at are also e-commerce, kind of like consumer facing. But I do want to mention again that we are not really actively investing. We are only kind of like we sit in the intersection between VC investors and startups. But we are exploring the idea of when a round happens, in exchange we get equity for it, but we don't necessarily invest. But I think in the future we might raise money and then actually invest. But for now, our expertise is really with investors in Southeast Asia in general, and then actually helping youth raise money.
Hmm. Thank you.
Yeah,
Okay.
that's fine.
Another question from Arianto Hong. Ari from Pinopi, Koki Kitchen. Okay. Is it true that attraction is the most important things for VC right now? Because when he do pitching with VC analysis, they told him that the unique idea is not really seen today. I'm not agree about this. Never mind. 10 years ago, yes, maybe VC will be looking for unique idea, but right now, VC looking for traction. That means for business must be running well to raise fund. Yeah, what's your take
Right.
about this?
Sure. It depends on the industry, as I mentioned. It sounds like if you're in is Cookie Kitchen like a cloud kitchen? Is it like a direct to consumer product kind of thing? And the reason I asked that is really depending on the sector. Some sectors are very mature. There are already a lot of competition, so you can't really say that like what's really out there is kind of like a new idea to you unless you come in with a very destructive product or technology to begin with. Then that might be appealing to them. But again, if you're talking to a VC analyst, for example, he or she may not really know your sector very well. So I would say don't just place your bet on one VC. Just keep looking for other VCs that might know your sector a lot better and is able to say that or is able to believe that this product is unique or this idea is unique in their kind of like in their sense or in their mindset. But again, yeah, because there's not, I don't really see a lot of information on what sector this is. So I don't really know what the where the analyst is coming from, unless it's one that's already very mature. Yeah, but typically, if the VC is not specialized in raising seed, if they only do later stage or kind of series stages, they would probably want to see it. It makes sense for them to see more traction, because they don't specialize in seed. But if you talk to a VC who specializes in seed, then they're not going to always ask for traction because there's no traction to show. So yeah, just be really selective and know who you're talking to.
All right. Anyone? Anyone else want to ask? Oh, did it answer your question, Arianto? Okay, I guess it is. Wow, Eileen, you answer very good.
Thank you. Well, I mean, great question, everyone. I think this helps gets me kind of thinking too.
Yep. Okay, so I would like to open maybe probably one or two more. Yeah. Anyone?
Still thinking.
Come on, don't be shy. Yeah, because it's very how to say I believe this kind of session is very rare, right? For people who want to raise fund, they have a chance to ask people who represent VC, some question.
Yeah.
Don't be afraid to ask a stupid question, right? Because as long as you can understand from after today and you learn from there, right? I think that is something that as a self improvement, I would say.
Mm-hmm.
Yeah. Okay. No, no one. Oh, okay. Ooh, Series A, nice.
Great. Glad to hear. Glad to hear. It's pretty foreign, but yeah, any stage or any point, we can definitely help and really understand what your goals are. But yeah, feel free to reach out. I think later on, maybe Ricky, or it might already be somewhere out there that my information is circulating. So if you want to add me on LinkedIn, or my email address, I'm open to get be in touch via email too.
Yep.
Or should I say
Oh,
WhatsApp?
WhatsApp. Oh yeah. If you want to share, I will share. With your permission, I will share with them and see how many people want to WhatsApp you. Yeah. Yeah. Maybe at this stage, right, they have a lot of questions which is a little bit more confidential. And yeah, probably that's one of the reason why they don't post up questions.
Makes
Yeah.
sense. Yeah, I'm open to answering more questions later if any, unless or until anything comes to mind later.
Mm. Yeah. Probably to complement Pak Dede. So, do you have any tips for the Series A? Those who want to raise fund for the Series A, any tips?
Yeah, it'll be nice to hear from the founder themselves.
So you want to get the background first. All right. Yep. So, okay. So, anyone else? If not, then we can I will end these sessions. And of course, we will share notes and some document with you so that because the intention of this session, right, after you attend here, right, if let's say you want to refer back on what is topic that we covered and what the thing that we cover, right, you can easily find in the notes itself. Yeah. So last call. I give 10 seconds for last call. Yeah.
No pressure.
Last, come on. All right. Feel like I'm in casino. No, you're in cafe actually. Just imagine this a coffee shop, and Eileen is here to as to accommodate any difficult questions. Yeah.
Or I'm assuming everyone already got what they needed, which is good.
Oh, that is good. That is pretty good. Yep. Uh, all right. So I think without further ado, we can end this session. So first of all, I would like to thank you, Eileen and the Concord team, for agreeing for these great sessions. And we from Workspace, right? We really love about these sessions. And if I can summarize about today, right? I think I learned a lot from you that apart from providing the financial documents, right? I think is pretty important for the startup, right? To provide more holistic picture, maybe in a deck or maybe in any kind of things. Yeah. So now, before we end, right? Do you have some conclusion or something that you want to share with people, so that yeah, or any last mark that you want to share with them?
Sure. Yeah, I mean, if you're thinking of raising money and you have a good idea, just really go for it. It's gonna be, I think, a very exciting journey and experience, even if you, yeah, like even if it's gonna be long, and all, but I think you definitely learn something from a business standpoint and from a fundraising standpoint. Um, and yeah, I think you also if you don't do it, you don't know what's going to come with it. But if you do it, you're going to be able to open, more opportunities. um but yeah, it is a way to get money and capital to grow a business that you truly believe in. So I think it's definitely the way to go. But I think I'm happy that people are coming over to really understand the landscape a little bit more, and to know what kind of risk that they're taking and if they're ready to take that risk. But yeah, for anyone who already has a business or a product, I mean, kudos to you. And for anyone thinking about something, good luck. And hopefully, you can just work with us, and we can help you raise money, or even if you work with somebody else, that's fine. We hope to be able to kind of cross path somewhere, and I really hope that this will be a good start for everyone.
Wow. I like that
Thumbs
remark.
up.
Thumbs up.
Respiration. Sweating.
Aspiration. Yes.
It is, but it is a
So,
hurdle that you will get over. And it
yep,
also just, gives you the kind of like the gut and the courage to do better things.
exactly. Oop. Hey, is it come from mine? No, right?
Is this like a closing up song?
Yeah.
Like time to go kind of song.
Oops, say. All right, so thank you so much for everyone who come here. I really, really appreciate our time here, especially Eileen. Thank you so much for answering all those questions. Wow, some of them were very tough one, I believe.
Yes, I
Yeah,
agree. Yeah, hope that we can do this again, and thank you for having me. Really appreciate the opportunity too.
yep. So, oh wow. Okay, I got one last question coming in the last minute. Do you want to take, or you want
Yeah,
to
I
answer in a
I I
separate
can
session?
quickly read it. Sure, I can quickly
Okay.
read it. How to
All
calculate
right.
business
Calculate
valuation.
business valuation startup to convince investor to invest in them.
Okay, so this is kind of two parts. One is the calculation of business valuation without revenue to speak to, and then the
Hmm.
second one is how to convince invest. Uh, yeah, so in terms of valuation for a company that doesn't have revenue, we'll probably have to look at similar companies that were able to successfully raise fund. Um, Perhaps, as you mentioned, in cybersecurity, we'll have to look at similar cybersecurity of your size or of similar product perhaps, and then look at what valuation they have received in previous rounds, and then we'll kind of do kind of like an average, or depending on um, how similar you are, or what kind of customers you're looking at, then we'll set a certain benchmark on that. So it depends on your other competitors alike.
Yes.
And yeah, it will be hard to even draw up a like a long DCF, because there isn't really a lot of like revenue to speak to. So we'll just have to do like basic computation based on other people who have received valuation. As far as convincing investor to invest in business model and you won't be able to get revenue, I think it depends on why like why when will you be able to get revenue, so to speak, and why there is like a certain gap. I think you do need to have some kind of form like story, or at least some plan as to how you're going to generate revenue, because if you aren't sure when you're going to generate revenue, then the investors will not be able to know when they're going to be able to get their returns back. So I'm assuming maybe it's there has to be a particular reason why you don't think you'll be able to achieve the revenue in the years ahead, because a couple years can be a very long time. Some of the investors are already expecting to see revenue or traction in a couple months, because with the money, I think that really goes back into like how much you're trying to raise and what you're going to use the money for, because they will want you to use the money to generate revenue, generate user. um, but I think on the revenue side, for a startup or for some company that's really small, um, there may be a possibility that you won't see revenue in the coming years, because I think you're really spending a lot of the money on just capturing the market alone, and maybe using that money to expand your team, expand your technology, and then just marketing in general, because all this are costly. So I think it depends on how you're using the money. It doesn't always have to be that you need to show revenue in the years ahead, if that makes sense. I'm hoping your reason is because you're thinking from a business standpoint, you're focusing on scaling, so you may not see the revenue until 2 or 3 years later, which is what has happened with kind of like Grab or Ovo. I think even today, they may have not. I don't know if they're even break even yet, right? I think in the early days they got a really high valuation is because they were able to create a market for themselves and really
Mm.
targeting the entire Indonesia population. But then the money that they've used was obviously to market, to offer discounts, to get people to adopt the kind of like the behavior. And then maybe hopefully in a couple years later they will see significant revenue and then exit. So it makes sense. I think you just need to have a very convincing story and like product and solution, and also like a product market fit to begin with. So I'm hoping I got your question as to like not seeing the revenue in the coming years. Hopefully you're like another story of like Gojek kind of thing. Yeah.
Nice. Thank you so much. Thanks a lot. Do remember to fill in a survey. It's actually in the chat box. Yeah, because from that survey, we will see what kind of topics that we can create together with Concord. Yeah, probably. Yeah, if you can put any topics that you want for us to discuss or to talk, then yeah, wait for our next event, I believe.
Okay. Yeah. I look forward to that if this is, a good
Yep.
event for everyone.
Mm. So, all right, everyone. So, this is yeah, sad to say this is the end of our sessions, and I'm pretty sure Miss Eileen here need to sleep. Now is what time is it there? Two.
It's about 12:30 a.m.
12:30 a.m. guys. Yeah, she's
I
in
am
US.
I am 15 hours earlier.
Yeah. So
But
the Cinderella has need to go back. Need 30 minutes, I guess.
yes, I'm late. My pumpkin already left.
Yeah, but I do appreciate that you spare the time, even like in the very ungodly hour.
It's okay. Yeah, I've
Yeah,
done this a couple of times, so
nice. Mm,
nothing too much for me.
yep. All right. So I'll see you guys.
All right, thank you so
Stay in
much.
touch. Yeah.
Yeah,
Bye
stay in
bye.
touch.
Thank
Bye.
you.
Y'all.
Wow. Hello.
Halo. Terima kasih.
Thank you. Thank you.
Survei nih. Congrats, Tian. Congrats. Thank you, everyone. Bye. Feedback waiting, you all.
Bye bye. Yeah, we'll be the last.